This just in, recession has been pushed back.
All right, I don't think we needed a report to tell us that. We feel it. Have you been out shopping for the holidays? It is
Holy
a madhouse
cow. Record breakers.
That's right.
Thank you for joining Don Gelly and Gino Franti on the National Real Estate Cafe. So we have some reasons we feel that the recession has been, let's see, the indicators are declining. And we've been saying this for a while too, is we don't see what all the fear is. And everyone wants you to be afraid because that's
early this year. There were things to be fearful of. The Fed, our government, everybody has done what they needed to do to avoid the crisis, and so far, good job.
Yeah, that's right. So the reason that it looked like we were definitely heading into a recession was due to the fact that we really had some issues starting in Q4 of 2018, believe it or not, rolling into 2019 was looking very scary. We're talking the doldrums of the housing market, interest rates went up a full %, killed affordability, scared the heck out of everybody. Thank goodness, rates have come down.
Well, it's funny because that's what's beautiful about our economy is that when all this fear enters the market, bonds go down because money comes out of the stock market and into bonds. Now, here's what's really interesting. The stock market has grown tremendously and the bond market has grown tremendously. So how is that even possible? That means people came out of cash and went into these positions. So it's very interesting what we saw happen this year. I think it's great. I think it shows that we have a great Fed.
That's right. So let's just jump real quick just to show you that it's not just two talking heads. This is
and on the side, Don is selling LASIK surgery so that you could read this.
Yeah, it is. Yeah, no kidding, huh? It is pretty small here. Okay, they like zoom it in. I forgot to zoom it in. Boom. How about that? There we go. All right. There's the big number I really want you to say. The recession indicators. This is one of the main indicators. Build Facts Housing Health Report, which is basically a precursor for previous recessions. And if that number from this report hits 60%, we ought to look out. That's a huge red flag. It was heading to 50%, and now it's down to 42% likelihood of a recession. And we think it's pushed back, I think, Q4 at the earliest.
Well, I think, look, you're going to have to evaluate this right now quarter by quarter. But I think we closed out Q4 pretty strong, and it's going to be a good 2019. The entire year is going to have a nice, solid GDP number. Remember that target GDP is about 3%. It doesn't need to be blockbuster. So if we're anywhere in the 2 to 3 range, that's great. Because inflation has also been in that 1 to 2 range.
Inflation is good. Employment, some of the lowest numbers of 3.5%, lowest numbers in like 50 years.
Reasonable wage growth.
Housing report just came out, one of the best numbers in 20 years. Like we said, employment good. Income for most of you are going up almost 3%, some above 3%, which is keeping above inflation.
And even as controversial as this is, minimum wage came up dramatically in 2019.
That was a fear, though, too.
I know. So because we didn't know if the corporations could handle it.
Right.
So now we've shown that the corporations can handle the higher minimum wage, and
it didn't cause inflation.
Okay, and it didn't cause inflation. But
that was the fear.
Well, that takes a while. We don't know if it didn't cause inflation yet. We'll see what happens. But most importantly is the tax breaks that were given to the corporations help them be able to afford the 2050.
Absolutely. That's a government working with the businesses.
And one more. Also, the people that benefited most from tax reform were actually the people that make less than $24,000 a year because they got a better capital gain, they got a better exemption, a better standard homeowners, better standard exemption. And so a lot of people didn't have to itemize taxes, and they got great tax write-offs. So less taxation at the bottom, plus higher minimum wage. Great things for the lower income section of the country.
And lower interest rates has helped. We're talking a full % lower than they were just a year ago. And the Fed's lowered rates. That means lower interest rate on your cars, your equity loans, your credit cards, all that type of stuff. So we feel that the recession has been pushed back.
Right.
That's good news.
Lower cost, higher income, good formula.
Good formula is to pay attention to the National Real Estate Cafe daily, where you get your source of what's really happening in the real estate and financial markets. You can always find out more at donandgino.com and subscribe to our YouTube channel. Thousands of great videos. These are videos that you can see, share, watch, share with your clients, friends, you name it. Thank you for being part of our show.